What's up, everyone? All right, in today's episode, I'm going to break down everything that you need to know to prepare for the SpaceX IPO this Friday, June 12th. We've got a lot to cover in today's class. This will be a deep dive. Parallel stories here. We're going to talk about the fundamentals of SpaceX, and we're also going to talk about the technicals. As many of you already know, I am a trader, and I don't have any skin in the game. I don't really care long term if SpaceX goes up or it goes down. Everything that I share with you is through the lens of this creates volatility, and as a trader, I crave volatility. I make money when things are moving. So whether it goes up or goes down, I'll find an opportunity. But I do have a thesis that I'll share with you of what I think it's going to do after the IPO. In fact, I have a pretty confident sense of what's going to happen over the next 2 weeks from the day of the IPO, and then going into the next 180 days. So 6 months out, I have a good sense of what this is going to look like, and I'm going to share that with you. So would I be a trader of SpaceX on the day of the IPO? Would I be an investor of SpaceX on the day of the IPO? Those are questions that I'm going to answer in today's class. Everything that I share with you comes straight from primary sources, including the prospectus filed with the Securities and Exchange Commission by SpaceX. It's called an S-1 filing. So I'm not sharing with you fluff and icing of opinion of all the things I think SpaceX could do. I'm just sharing with you what they actually are saying they're going to do, some of which does seem like hyperbole, but nonetheless, it's what I'm going to share with you here today. So let's go ahead and jump on the screen share. I do have a slide deck. We've got a lot to cover, but maybe I'll begin by just jumping on the whiteboard for a second. So let's sort of talk about the outline of today's class. Number one, it's important for us to talk about the fundamentals of SpaceX. And when we're talking about the fundamentals, we're talking about the company, what they do, who they are. We're talking about how much money they make. And we're talking about the valuation methodology for this IPO, which is currently valued at just under $2 trillion, which is incredible. We're going to talk about potential headwinds that they face as a company, but we're also going to talk about the Elon Musk factor, right? This is no doubt a huge part of the story. And when you're investing in SpaceX, you're really investing in Elon Musk here. This is about investing or backing the jockey, not the horse. That regardless of what Elon Musk is doing, if you're an investor long-term in SpaceX, you believe in him. And so we'll get into that in a little bit more detail. So that's the story of the fundamentals, which is important. And then we have the story of number two, the technicals. So the technicals for SpaceX are very interesting. We're going to talk about how a hyped up IPO typically trades. So I'll give you examples from other IPOs I've traded in the past. And that gives me I already have a good sense of how a hyped up IPO will trade. But then we're going to talk about why SpaceX is different from those other hyped up IPOs, because there are some very significant differences that come down to a structural component. Essentially, the way the company has been structured, just based on this initial public offering, has actually really set it up to succeed, which is very interesting, just structurally. So we'll talk about that. And then we're going to get into a little bit of historical context about the trend that we've seen in the past number of years when it comes to these big IPOs and what that means for retail traders and investors like you and me. I will also touch on some adjacent investments or trades that I think actually have that are perhaps more interesting. In the past couple weeks, I've had a couple of huge trades on stocks that were space theme. So these are small cap companies that put out news of getting into the space sector. So whether it was space data centers or doing something to do with space, right now that theme is very hot. And so we may actually see more ROI on some of these almost sympathy stocks that are piggybacking on the SpaceX momentum, but that have such lower valuations that they could much more easily go up 10x or more. Whereas for SpaceX to go up 10x, well, geez, I mean, it would have to be a nearly $20 trillion market cap for that to happen. So that's going to be that's going to take a while. All right, so let's go ahead and jump on the slide deck here, and we'll begin with the fundamentals story. So when we're talking about the fundamentals of SpaceX, Number one, you have to recognize that what we currently have are the fiscal year 2025 financials. This is from the S1. So this is directly from the filings that SpaceX has made, which is good. So this is a primary source. So what we know is last year they brought in total revenue of $18.7 billion. That's a lot of money on the one hand. On the other hand, context is important. We will put this into context. This is about 80% less money than NVIDIA brought in. And yet, SpaceX is being valued very high relative to NVIDIA. NVIDIA is profitable. SpaceX is not. This is very interesting. Again, SpaceX has the benefit of Elon Musk and the whole story around him, and so that it's not really an apples to apples comparison. But many people do try to look at comps to understand what should be the market cap for a company doing 18.7 billion in total revenue and yet losing 4.9 billion. So they had a net loss last year of 4.9 billion. But when you break down the financials, there are three segments of SpaceX. You have connectivity, space, and AI. So connectivity is the Starlink system. And I will say, full disclosure, that I use Starlink. I have 3 subscriptions right now. So I have 3 Starlinks. I have them mounted on my cars. I don't use them at home. But I love SpaceX. I love Starlink and SpaceX, I guess, through that. It's been really good over the past 4 years. And it has been getting better and better. So this is the interesting thing, is that the Starlink has such a competitive advantage in connectivity. They have, at this point, about 10,000 satellites, these constellations of satellites providing the internet connectivity for the Starlink system. It's really, really great internet. Now, if you were in New York City, you're in a very congested area, or you're inside a building and things like that, you don't have a view of the sky, then it's not very good for you. But the fact is, connectivity represented about 61% of their revenue in 2025, and it actually produced a profit. It is a profitable segment of the business. Now, if you were going to invest in SpaceX purely for Starlink, you're essentially investing in a telecom company. And telecom is not a sexy investment. People don't invest big in, Verizon and T-Mobile and whatever, because it's not that sexy. Why not? Because they're regulated monopolies. Essentially, they are a monopoly, but they're regulated by the government. And so Starlink, because they are dominating in satellite internet, I unfortunately think that a potential headwind is that they're going to become a target for regulatory action. And now, probably not under the current administration, but in the future, probably. Nonetheless, right now, it's their most profitable segment for 2025. Space produced $4 billion of revenue, but it operated at a loss, as you can see right here. And AI produced $3.2 billion in revenue, but had a substantial loss in 2025. So that kind of sets the stage there. Now, to dive a little bit deeper on the connectivity side, so Starlink is the most successful division of SpaceX, with $11.4 billion in revenue and a profit of $4.42 billion. They've got 10 million subscribers, and they've got a fairly substantial total available market. In fact, there's huge areas of the world where Starlink would be your only source of internet. You don't have fiber, you don't have cable, and so they have a huge total available market. But there is some question about how many people really are going to become a subscriber. It's not cheap. It is fairly expensive. I probably pay like $700 a month between my 3 subscriptions that I have. The actual satellites, one of them I paid $5,000 for, the premium or the performance in motion one, the one that's like the size of a pizza box. So, it's not something that just anyone's going to buy. And nonetheless, you still have this anti-monopoly risk. Then you've got the space division of SpaceX. SpaceX is the leader in space. They're also the leader, of course, in connectivity for satellite. Their engineering far exceeds any nearby competitors. And if competitors such as Amazon wanted to launch their own space connectivity services to compete with Starlink, they would need to launch using SpaceX rockets. So, that creates a real stronghold on this entire sector. And that's one of the benefits of having a company that can do so many different things. One segment can support the other segment. So the space segment is supporting the connectivity segment, right? And now the AI segment is going to be supporting both of the other two segments. So that creates a huge economic moat, using the expression of Benjamin Graham or Warren Buffett. So while space operated a loss in 2025, it's given SpaceX a significant strategic advantage. Now we have AI, the third segment of the business. And this is, again, just diving first into the fundamentals. AI includes their data center, Grok, and Twitter X. So SpaceX owns Twitter X. All right, so that's important to take note of. All of the investors that helped Elon Musk buy Twitter and take it private got shares of SpaceX. So they're now shareholders of SpaceX. The profit, generally speaking, of Starlink is being spent on space and AI. And in 2025, AI was the biggest loser. However, earlier this year, SpaceX announced they would be earning approximately $15 billion a year, $1.25 billion per month, in their contract from Anthropic. That by itself substantially increases AI segment earnings for 2026. And just this week, 3 days ago, SpaceX inked a 32-month deal with Google for, I think, $920 million, nearly $1 billion, rounding up, per month. This now secures a total of about $27 billion per year in these lease agreements, making their AI division potentially the most profitable. Well, it's going to have it appears that it'll have the highest in gross revenue at the very least. If it's not the most profitable, that part we don't know yet. So Q1 2026, this was before announcing some of these new agreements. Connectivity represented 68% of their profit. Space continued to operate at a loss. AI continued to operate at a loss. The problem with the Q1 2026 is that it shows that operating losses were actually increasing versus 2025. Since inception right now, this 25-year-old company, which SpaceX is, has lost about $37 billion. So in total, they have lost a lot of money. So you could say lost, but they've been investing it strategically, reinvesting it in research and development. So now, just to do the comparison that a lot of people are doing right now, fiscal year 2025, NVIDIA brought in $130 billion of total revenue. So more than 5x the revenue of, 6x the revenue of SpaceX. But they produced $72 billion in net profit. NVIDIA is a cash cow. They are spinning off so much profit, it is unbelievable. And they have a $5.3 trillion market cap, a PE ratio of 33, shares outstanding are 24 billion. The float is about 23.24 billion, and the price is around $220 a share. So big picture. SpaceX does 22% as much revenue as NVIDIA. All right. So if SpaceX were just a mini NVIDIA, then the market cap would be about 22%. So, if all things were the same, except that SpaceX is not profitable. It's not operating with the same profit margin. So if all things were the same, except that SpaceX is losing money, then not only would it be priced with a market cap of 22%, it would be much lower than that. So you're talking just on that kind of comparison that SpaceX would easily be trading only at like $50 a share, but the IPO price is $135 a share. So there's a big premium here. Where's that premium coming from? People are buying SpaceX not because of the current business model alone. Yes, Starlink is awesome. Starlink is a good business model. How big can it get? I don't know, but it's pretty big, and it doesn't have anyone close to competing with them. So it's working. Space, well, it supports space. It supports Starlink, so it's an important part of the business, and it has future potential as well. Whether or not we're going to have data centers floating in outer space, that I don't know. That type of thing seems like it's a far wish list, and it's very far removed from where we are right now today. So to value the company based on that happening seems like a little bit of a stretch. Equally, to value it based on colonizing Mars, that's so far away, to be expected to pay that multiple in value today seems a little unrealistic. But again, if you're basing this investment on Elon Musk, that you believe that this person is capable of incredible things, then you want to be a part of SpaceX. So the valuation problems right now. They said in their filings that the total available market for AI segment is $26.5 trillion. That's for the AI segment. But there's a little bit of a problem with that a lot of people are pointing out. Grok does not dominate in the AI segment. And even the companies that do dominate are losing money. So think about it this way. Starlink is dominating in space, and that gives them a huge strategic advantage. They're the most successful, they're big. How would someone else compete? It would be really hard at this point to even get an edge in on that market, right? Because it's so well dominated by Starlink. Well, AI has been dominated by ChatGPT and Anthropic, Perplexity. There's these other companies that are doing arguably, look, they're a lot more popular. So whether or not you like Grok is, I suppose, another question, because the market is speaking for itself, or what the market is saying is that it's not that popular. So if it's not that popular, how would it become more popular? Well, this is kind of an issue right now because a lot of these AI companies that are really popular are also losing money. So this has been a topic with the Anthropic IPO that people are speculating will be later this year, and then OpenAI a little bit after that. That Anthropic moved to a different type of billing for their enterprise customers, and all of a sudden you've got these enterprise customers that have blown through their entire budget of what they thought they would need for their AI systems in a matter of months. And they're spending an unbelievable amount of money. It's truly staggering when you read how much money some employees are spending using their AI tools. It's more than the employee makes as their salary. Now, you could argue that it could make the employee that much more efficient, but then you've got to fire a bunch of people for that math to add up. So I think that at this point, aside from the fact that OpenAI and some of the others are beginning to bring in advertising, Google makes money on advertising, right? So sponsored links at the top of each search. So you start to get that in AI, and that in theory should help pay for it. But nonetheless, there's a big question here at how to make money. And so you could make money by charging more money, but then if you charge more money, your total available market goes down. Your total available market right now is high, and the total amount of people that are interested in using these AI agents and assistants and tools and everything else is high because the price has been artificially kept low, because the companies are trying to get people hooked on it and then sort of figure out how they'll make money with it later, which is a nice idea as long as they figure out how to make money on it. So when it comes to the valuation, there's the price to sales ratio. And what this is basically doing is it's looking at last year's total revenue, and then it's using that as the ratio, or as the multiple, to figure what the market cap should be. And so when we look back at some historic IPOs, and I took a selection of a few of the bigger ones, you can see what their current revenue in the previous year was compared to the market cap at the IPO. So right now, SpaceX, they're trying to raise $75 billion. They've got $18.7 billion in revenue. And they're at a IPO market cap right now of about 1.77 trillion. That's 95x. That's an extremely high ratio. You look back at some of these other ratios: Robinhood 30x, Coinbase 50x, DoorDash, Airbnb, Facebook, Meta, Google. You go back to Amazon back here. Amazon in 1997, when they IPO'd, their market cap was $438 million, and they raised only $54 million in their IPO. They raised $54 million in their IPO. The previous year, they'd had $16 million in revenue, which is kind of crazy numbers when you think about $54 million all the way here to 75 billion. That's a lot. 75 billion. Now, raising 75 billion by itself is one big number to get your head around. And okay, so compared to the pre-IPO revenue, 18 billion to 75 billion, that's not too dissimilar from 16 million here to 54 million, right? I mean, in terms of a ratio. But what is very different is the market cap right here. These are very different market caps. So today, what we're seeing is that investors evidently are putting an exceptional premium on all the things that SpaceX could do or may do. And so I think that this creates a little bit of a challenge if you're thinking about buying SpaceX at the IPO and holding it for the next 10 years, which I'm sure many people are thinking about doing. But at its current valuations, investors essentially are being asked to value SpaceX today as if it were the leader in AI and it were profitable. But it's not, because AI represents the majority of the total available market that is created, that is sort of the substantiation for why the market cap is as high as it is. And so I think, this is something that, again, I have no position in SpaceX right now. So I'm just sharing with you my interpretation of what I'm reading in the filings and what I've read in news articles and, watching interviews and things like that. So in my gut feeling is that, I'm going to hold off on that because we're going to get into that in a second. All right. So now let's talk about the innovation argument. So you don't want to underestimate Elon Musk. These were solar electric cars in the 1990s. And I don't know if any of you guys went to school in the 90s, but I did. And I remember these solar powered cars coming to the school and they would show them off and they looked absolutely ridiculous. This looks like a horseshoe crab. These are the silliest looking cars. It's a bicycle on wheels with, a giant array of solar panels. And they're like, this is going to be the future, electric cars. And everyone laughed at them. And then, they couldn't drive uphill on their way out and they would get stuck in the snow or whatever. So this was the 1990s. And as we know, Elon Musk, it has been certainly responsible in a large part for making electric cars as popular as they are. Hybrids and pure electric cars now are nearly 1 in 4 cars in the United States. So something that at one time was unimaginable has now become commonplace. And I say that because he's already doing that with SpaceX in the space division, right? The space segment has done the unimaginable. They figured out how to reuse these rockets. And they're innovating at a level that NASA and other countries haven't been able to innovate. And these countries, it's kind of unbelievable how much they've been able to do. And so this is an argument for the private sector over, the government trying to do this stuff. But I don't want to underestimate the Elon Musk factor. So you're betting on the jockey, not the horse here. But SpaceX is not without, as I said, potential headwinds. So the first is that the company is not yet profitable as a whole. The AI segment, it does have profitable contracts, but with short notice cancellation clauses. So those short notice cancellation clauses mean that what is currently an extra $27 billion roughly of annual gross revenue could fluctuate fairly quickly inside of a quarter, within 90 days. They do have the telecom style regulatory risk for Starlink, ongoing and heavy R&D and CapEx. That's just part of the business because launching satellites into space and you have to maintain them and everything else. And then they've got the insider lockup expirations that will increase the float and the supply. And we're going to get into that when we get into the technicals, because it's a more nuanced component of this IPO, but it is very important. So let's go ahead and transition to talking about the technical elements of the SpaceX IPO. I am a technical trader. This is the area where I really shine, and I'm going to give you a bunch of examples of other IPOs that have been hyped up. Generally, when it comes to fundamentals, I look at them enough to have a kind of big picture understanding of the company. And this is specific in the case of a hyped up IPO. I wouldn't do this on any old stock I might be trading for a matter of 5 minutes. But for a hyped up IPO, I try to look into it and understand it as best as I can. But at the end of the day, My job will be to trade the volatility and to trade the price action that's right in front of me. My trades can be as short as minutes long, even seconds long on a really fast trade. So at that point, I sort of put the fundamentals aside. But looking at the fundamentals is important because it helps it gives me insight into what I can expect to see in the price action. Sometimes when I don't understand the price action, I go into the fundamentals and then I see something and I'm like, oh, that's it. Why is there so much selling on this stock? Oh, they're doing an offering with this, underwriter, and that underwriter is known to be very aggressive selling direct on the open market. Okay, that all of a sudden adds context. Or why is there an incredible amount of support for this company? Oh, it's getting included into a giant ETF like the NASDAQ 100. That's an important thing to be aware of. So first, let's talk about how hyped IPOs typically trade. This is Airbnb. It went down 50% versus the IPO day. All right, now, not immediately, but as you can see here, we IPO'd on Airbnb, and that day was a red candle. The price dropped down, it spiked up, and then it closed a little bit lower. I traded it, I made money on it, and I was in and out of it within less than 15 minutes. The next couple days, it sells off, it rallies back up, it dips down, rallies up even more, pulls back, and then kind of stabilizes here before selling off, comes back up a little bit later in the year, and then 2 years later, it's down about 50% versus the IPO high. So this is a fairly significant drawdown. Now, I share this with you just as one example. Here's a second example, DoorDash, down 68% versus the IPO day between the high here and the low down here. So this one I also traded and made money on the initial IPO day, which, as you can see here, had about 180 million shares of volume. If we look at the volume, just go back real quick, Airbnb did about 70 million shares of volume. So, this is the Uber, this is Dash. So let me just, you know what? Yep, that's right. So we're gonna look at Uber. I forgot to just update the name, sorry, on that slide. So this one's Uber, this one is Dash. So we'll do Dash first, then we'll go back to Uber. So DoorDash. So this was, and I did trade DoorDash, and I also traded Uber. So all of these I trade on day one. So Dash did about 32 million shares on day one, sold off, came back up, sold off, but within, as it turned out, a year and a half, it was down 80% here. Way, way down, $40 a share versus these highs up here, which were $260. That's not good. Going back to Uber, this one down 68%. So the IPO day, it never really got higher than that. It took a long time, but it sold off all the way down to about $15 a share before coming back up to 60. So when you look at some of these previous IPOs, I want you to think about your bias or what you think might be the right thing to do if you want to invest in SpaceX. So if you want to invest in Airbnb, for instance, where would be a good time to be a buyer? Well, certainly not up at the very top, and probably not on the IPO day because it dropped down and then came back up. Maybe down in these areas after we double bottom support, down here, back up here, maybe down in this area after that level of support, or maybe just in this area when it started trending back up. What about Uber? Well, again, not on the IPO day. After it found some degree of support and was trending back up, maybe through this area here, it starts to get more interesting, but even then comes back down a bit. DoorDash, initial IPO day sells off, rallies up strong, then sells off, comes back up again. Now it's been beaten up for a long time, down 80% versus the IPO day. What about Robinhood? Robinhood's interesting, a very strong IPO. Look at that. It IPOs and in 3 days goes from $32 a share to $88. Now they IPO'd at just the right time. In a way they did because it was tied right in with, all the momentum of the pandemic. But on the other hand, they were also, many people felt responsible for the GameStop short squeeze not working out the way it should have. So I don't know. But in any case, the price came all the way down here, down to $7, $8 a share before, it's rallied up since, but just for context. Coinbase, IPOs and just tanks. All right, so this one, not very good, dropped 93% versus the IPO high from there down to here. Rivian, 90% versus the IPO day. Did move up for a couple days, and then it's just been coming back down since. Circle IPO. Now, this one's a little bit different. So the Circle IPO is was very strong. This one was last year, and it IPO'd at like $40 a share. I traded it on that day, made some good money on it. I think it was around $30,000. And then over the course of the next few days, it ends up going up 300%, which was crazy. However, it had a relatively low float for an IPO this big, subject to a lockup period where insiders couldn't sell. But then eventually reality sets back in, and now the price is back down around the IPO level. So what's different about SpaceX from these other IPOs? On the one hand, you might think, well, geez, it seems that IPOs are kind of risky. They IPO and some of them go up a little bit for a week or two, but more often than not, they seem to drop quite a bit. So number one, we've got the float. SpaceX is selling a very limited number of shares versus the number of shares outstanding. So to raise $75 billion, they have to sell about 555 million shares at $135 a share. But that represents less than 5% of the shares that are outstanding. So if we jump onto the whiteboard here, we've got 5% right here, which is the float. And we've got 555 million shares. And then we've got the whole rest of the pie, which is SpaceX. So what's really interesting here is that these 555 million shares, when we're trading it on the open market, are essentially determining the valuation for all of these shares. And there's something like 12 or 13 billion shares. So all of these shares get their valuation from the supply and demand of just this little tiny piece, which is 555 million. That seems a little, it seems like that could present a problem at a certain point, and I think it will. But the remaining shares are restricted by a lockout period or a lockup period, so they can't be sold at least immediately on the open market. So the early lockup release period is going to potentially increase the supply from 555 million shares to closer, potentially, to about 7.5 billion shares. So that is substantial. Approximately 7.5 billion shares are going to be eligible to be coming onto the market and become part of the float within the next 6 months, approximately. And that's based on this lockout schedule or lockup period schedule, which is from the S1 filing that SpaceX filed. And so the release is in these kind of tranches. So it's staggered. So they're not all hitting the market at once, but over the next 70, 90, 105, 120, 135, and 180 days, these shares are going to be eligible to be sold on the open market. So who owns all of these shares? Well, these shares that are going to be eligible are shares tied to, some of them are going to be tied to Twitter, people that, investors that bought Twitter, and others are tied to people that were early investors in SpaceX. SpaceX is not a young company. They've been around for 25 plus years. So there have been investors, I think there's been 20 rounds of investing over the past 25 years. In other words, if you were wealthy, you have had every opportunity to buy into SpaceX long before the IPO. In fact, the only people that really are getting access to the IPO, to SpaceX now for the first time in this IPO, are, dare I say, dumb money, retail traders like you and me. It's not sophisticated investors. They've already had so many opportunities to get into SpaceX. And so in fact, the day of the IPO, when this is publicly trading at $135 a share, it will be the highest valuation that all of these shareholders, and 42%, approximately 42% is Elon Musk, and his shares are also restricted. But it'll be the highest valuation they've ever had, which is what's going to make Elon Musk the world's first trillionaire. Incredible. Incredible. And again, it's on paper, because if he wanted to sell his approximately 5.5 billion shares, which he's not eligible to sell them, but if he wanted to sell them all, the market wouldn't be able to sustain that selling. There won't be enough buying to buy 5.5 billion shares in one day. Even if he wanted to sell them, it would be impossible, right? Now, could he do a swap with some institutional investors who want to take a big chunk and maybe at a discount, blah, 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 whatever, but he would not be able to sell them on the open market. But you can see that with this staggered release schedule, insiders who have held shares for a number of years, some maybe more than a decade, will be able to start selling on the open market. This is an important dynamic to understand in the relationship between supply and demand, because this has the potential to drastically increase the supply. So now, will there be enough demand to absorb all of these shares without the price tanking? Will there be enough confidence from insiders to agree not to sell their shares because of what they know it would do to the stock price? Maybe a lot of these insiders are along for the ride and they're not going to sell any shares. But if they represent investors underneath them, it's a hedge fund or something like that, they will likely have to begin selling some shares at a certain point. However, SpaceX negotiated with NASDAQ when they got their listing, and NASDAQ changed their rules to allow SpaceX to become part of the NASDAQ 100 as of day 15 after the IPO. And SpaceX will be weighting, the weighting is estimated to be between 0.47 and 0.7% of the total fund. And that's what that's essentially going to mean. So number one, a lot of people are finding this to be controversial, that NASDAQ changed its rules essentially to get the listing from SpaceX. And other people are saying, well, look, if you're investing in a fund, an ETF, you want a piece of the entire market. And SpaceX is part of the market. Granted, its weighting is less than 1% of the total fund. So if you want some exposure to SpaceX being one of the largest companies in the world, then you want it in the fund. But what it means is that everyone who's invested in the NASDAQ 100 and the funds that are investing in the NASDAQ 100 will be rebalanced to include SpaceX. This will result in a one-time event that will create significant buying support for SpaceX because the fund will have to purchase SpaceX shares on the open market. And then moving forward, anytime someone buys part of that ETF, they'll be getting a small sliver of SpaceX. So that's going to create a degree of long-term support, which is naturally probably one of the reasons that it was something that was so important for the SpaceX listing. Now, SpaceX also was petitioning the S&P 500 to include SpaceX, but they did not get that request approved. So currently, the S&P 500 has a 12-month seasoning period for an IPO, and it requires profitability over the 4 most recent quarters, which SpaceX doesn't currently meet because they're losing money. So as of right now, the inclusion to the S&P 500 is on, back burner. It's not going to happen this year, next year maybe, or 2028 at best. But that would create additional buying support when it happens. It'll probably happen, but we don't know. Now, number 5 are the Twitter and X investors. Investors of Twitter and X became shareholders of SpaceX, and these investors may end up selling shares when their lockup period expires. They may want to cash out. They've gotten most likely a fantastic return on their investment. So, that's another variable. Now, something else that I haven't mentioned, but is the discussion of SpaceX doing some type of merger with Tesla and creating a gigantic company. The motivation to do that potentially would be that Elon Musk is in complete 100% control of SpaceX. His voting rights give him complete control over all decisions. He can never be fired. And so he could take this current opportunity with the amount of hype around SpaceX to do some type of merger with Tesla and roll Tesla into SpaceX, which would create a ultra big company. But the details of how that would work and what that would mean for current Tesla shareholders and SpaceX shareholders is all speculation. Number 6, this is very important. Retail allocation. Typically, hyped up IPOs, retail traders like you and I, we could request shares through our broker. If you use E-Trade or Schwab or Robinhood, you could request to get access to shares and you'll almost never get them. But with SpaceX, Elon Musk has allocated 30% of the shares in the IPO to go to retail traders. On the one hand, you think this is awesome. This guy's looking out for the little guy, the retail trader. On the other hand, we're known as the dumb money. And so what I'm noticing here is, and I'm just kind of doing the math here, 30% of the IPO for retail, it's over $20 billion for retail. I mean, we've got, none of us have that much money in our pockets individually. It's more than 150 million shares. So what I'm seeing right now is that brokers are coaching their customers on how to request access to shares. I'm seeing it all over the place, all over social media. It's unbelievable. The CEO of JP Morgan is hosting a special meeting for high net worth clients to discuss SpaceX. So it seems like there's really big broker support to encourage sort of your typical investor to buy into SpaceX. I've been seeing a lot of that. And so Robinhood, just to break down the numbers, has about 26 million accounts. Of them, 3.48 million, or about 13%, are gold users. I am a gold user at Robinhood for my account. A gold user means you have access to margin, and so almost any active trader would be a gold user, which means only about 13% of their users would be what at least I would consider to be an active trader. And Robinhood seems to be like that would be one of the more active brokers, because you don't put money in Robinhood, as a grandmother who's doing like wealth management. That's not what Robinhood's for. So arguably Robinhood probably has more than 3.5 million accounts that are interested in the SpaceX IPO. But right now, if we just thought about the number of their accounts they have that are active gold users and active traders by default, in my opinion, it's about 13%. Schwab has 46.5 million client accounts. But there's no doubt the vast majority are retirement and wealth management accounts. How many of their accounts are actually active traders in the market? Active discretionary investors, buying and selling stocks in their own account. Interactive Brokers has 4.4 million accounts, but it's a more sophisticated broker, right? So more sophisticated investors and traders are there. Fidelity has 50 million accounts, but again, dominated by wealth management and long-term investors. So what I was trying to figure out is how many retail investors do we really have out there that are interested in buying SpaceX? And just looking at these top 4 brokers, using the 13% kind of ratio that Robinhood has, I figured if Schwab had 13% that are pretty active, that would be like 6 million accounts. For Interactive Brokers, I said maybe 75% are active, because that by itself is a more active broker, but I don't know that. And then Fidelity, maybe only 13% again. So that's a rough number of, let's say, 20 million accounts. Now, I could be way off right there. I don't know how many are active, and we don't have this information. So the information that I got from Robinhood is straight from their filings. And I'm getting this information from filings, but I'm having to extrapolate what might be the amount of active accounts, because they don't share that exact metric. And they probably keep it, I don't know, they just don't want to share it. So if we just said 20 million active accounts, well, now I'm thinking if 20 million active accounts all requested shares, and I don't know, I can't really imagine that there are 20 million, well, but I don't know, maybe there are. Let's just say 20 million, maybe there are, maybe 20 million active accounts have all asked for shares. Each account would get 8 shares. That's $1,000 worth of stock at $135 each. And that would use up the 160 million shares allocated for retail, 8 shares each. So, I don't know. So what does that mean for demand? Is there going to be such a high level of demand? Now, one thing I would say is what you could do is you could request shares, and then the day before the IPO, they'll tell you whether or not they can get them for you and how many they can get, and then you confirm it. I'd be curious if everyone puts in a request and we all get all the shares we ask for, that tells me they've got a lot more supply. If we only get a few of the shares, let's say you ask for 100 and you only get 2, that's like, wow, demand is really high on this thing. We won't know till Thursday before the IPO. But if we only get a small number, then we know that the demand is really high. And that means people didn't get the number of shares they wanted. And that means when will they buy it? The day of the IPO. But if you get all the shares you want ahead of time, then you don't really need to buy it on the day of the IPO. So what about retail flippers? How much less buying will we see on the IPO day, since retail traders will likely have access to possibly as many shares as they want prior to the IPO? Now, this is again speculation because we don't know yet, but will retail traders just flip out of those shares for a quick profit if the IPO opens above 135? Because what typically happens with a hyped up IPO is the IPO price is $135 a share, but it opens for trading on the day of the IPO already up 15, 20%. That's not uncommon at all. So the IPO price of $135, opening at 145, 150, even 160 or 175 wouldn't be insane. If it opened at 175, you would have a natural price target of $200 a share on day one. You would logically think that way. Even though this is a huge company, that's the way traders think in these big round numbers. If we open below 150, 150 is the first target. We open above 150, 175, 175 up to 200. So that has the effect potentially of increasing the market cap on SpaceX from 1.77 trillion to upwards of 2.5 trillion on day one. And yet, who could sell on day one? Well, maybe some of these retail traders who are flipping. Now, some brokers will restrict you from flipping shares. They'll make you say that if you're going to take the shares, you've got to hold them for a minimum of 45 days. So you've got to make sure you read the fine print when you accept the shares. They'll tell you if you have that restriction. So some brokers frown upon flipping the shares, getting them at the IPO price and selling them on like day one or day two. They don't want you to do that. Others don't care, so look into that. But given that there may be some flipping, there probably will be. Some people will say, I don't care, I'm going to flip anyways, and so what? I don't get any future IPOs with this broker. Big deal. You know, I made $10 a share on 1,000 shares. I made $10,000. It was worth it. So what typically happens on the IPO day is it opens quite a bit higher. And so I expect that with SpaceX because that's what typically happens. But part of the reason that typically happens is because day one is the very first opportunity for retail traders to get a piece. It's the very first chance. And there's so much FOMO. In this case, it may not be the first chance if retail traders have already gotten all their shares allocated. So please, leave in the comments below if you request shares, if you got them, and how many you got. This is going to help everyone else who watches this episode better understand what the supply demand is looking like going into Friday. So you can help everyone else here on this channel by just posting that and telling us kind of what you experienced. And I'm going to do it myself. I'm going to try to request it in my Schwab account, and I'll see if I can get any. I guess I could try my Robinhood account too, but it doesn't really have any money in it right now because my small account challenge has only got a couple $1,000s. So I don't think that would be a very useful indication. So will I trade SpaceX on day one? The answer is, let's go back. Let me run that one more time. Will I trade SpaceX on day one? The answer is yes, cautiously long biased. I think realistically, an investor would have to be outside of their mind to short SpaceX on day one, knowing that the NASDAQ rebalancing is coming on day 15. You'd have to be out of your mind to short into this retail mania. I'm going to say something. You might not like Elon Musk. You might not agree with him and what he's done in politics and whatever. But when you stand in front of a moving train, you get run over. The valuation, the fundamental valuation doesn't always make sense. The stock can keep going higher. We've seen this across the board in all different markets. And so SpaceX, if it's a type of stock that's structurally set up to succeed because of the limited float, the lockout period, and the inclusion in the NASDAQ 100, I'm not going to stand in the way of it succeeding. Now, if it doesn't succeed, I'll be surprised. But I would not be shorting it on day one. That would, to me, be insane. I also don't know that I want to buy it and hold it for 15 days because it could be highly volatile. So I am cautiously long biased, but I am recognizing that what's different with SpaceX is the retail allocation. That is the biggest difference to me because it could affect the amount of demand on day one. And it could create selling that we wouldn't typically see on day one. But realistically, I think we're going to have strong buying support through at least the first 3 weeks of trading until the lockout periods begin, and then until the lockout periods begin to expire. So the first lockout periods are coming in, I think it was August, if you just jump back to that slide. And it wouldn't be surprising to me if going in to that kind of cliff where we're going to start seeing insiders have the ability to sell, if there'll be people that are shorting into that, expecting this increase in supply to potentially come onto the market. Because I don't know if there will be enough daily buying volume to support when they decide to start selling. And we don't know when they're going to start selling. But it wouldn't surprise me if the chart ends up looking something like this. IPO day right here, and we move up steadily for 15 days. And this is not investment advice. I'm just making, my educated prediction based on educated intuition. So we move up for 15 days. Maybe we move up for a month, 1 month. And then what's going to happen is as we approach Q2 earnings, if the stock is up 30%, then 7% of the shares are going to be unlocked based on this achievement right here. And that's where we begin the cliff of unlocking shares right here. And so as soon, well, it would start, right about here. So once we're coming to that spot, that's where I would expect some more institutional level short selling to occur as they're betting that these insiders are going to take profit. And that's where I would worry about a sort of steady stair stepping down. And it wouldn't shock me at all if we go below the original IPO price. It wouldn't shock me. I would not be surprised, considering what we have for historical data that supports that the majority of big IPOs end up going, let's see, where was that slide? The majority of big IPOs end up going down versus their IPO price. Where was that? So this was the slide where I was saying, would I trade it? And then would I invest in it? So here, what we know from historical IPOs is that typically you have the IPO. At best, you have, this is the more typical IPO. You IPO, the price goes up, and then it begins a downward decline. And we have seen declines as much as 90% before they rally back up. Now, if we pull up the chart on Robinhood here just for a second, you want to be a trader here, that's fine, but look at the sell-off. Where was the right time to be a buyer on this? And it's after it's stabilized at some point, and then you get this nice recovery. So what we know about these big IPOs is that they're usually priced high, they're really hyped up, they open high, and then they have a period of selling off. So this has been true with pretty much every single one of these IPOs right here. And I guess, let's check Airbnb, because I actually think that we did go below the IPO price, but let's just double check that. So Airbnb, let's see, no, maybe not. So you know what? Yeah, so this was the thing. Airbnb was super hyped up. Even though their price was low, they ended up opening super high and then pushing higher. But it still ended up dropping substantially before it's come back up. So nonetheless, buying on the day of the IPO wouldn't have been a necessarily good idea. And I think this right here speaks to a little bit of a bigger question in the market, which is, why is it that companies are waiting later and later to IPO? The answer is because they're raising money with venture capital. They're raising money with private equity, and they're coming to the market later and later. So the problem here is, who's missing out? Who's losing? Well, let's look at some of these companies. So Apple, IPO price of $22 a share. And the market cap at the IPO, 1.8 billion, which is not insignificant, 122 million shares, or $1 million capital raised. And the return is 2,500x. Microsoft, 4,000x. Amazon, 6,000x. These are huge returns on the public markets if you are a buyer, basically at the IPO price. Google, a little less. Facebook, 15x, a 15x return. IPO'd at 38, valued at 104 billion, dropped to $17 a share, and then rallies back up. 15x. Airbnb right now, not a big return, marginal. DoorDash, not a big return. Coinbase, no, not at all. Robinhood, okay, now it's doing better. Rivian, again, it's the problem, and so SpaceX is to be determined. So how would you get a big multiple on SpaceX? So the issue here is that these venture capital, private equity investors are getting in before the public markets. And in my opinion, it's unfair for retail traders because, retail traders, we're just getting the final scraps. In other words, the day of the IPO will be a huge payout for venture capital, private equity, for the people that were in early. And we're just getting the scraps. We're just getting the very end. So in order for retail traders to get a 10x return on SpaceX, it needs to go to a nearly $20 trillion market cap. Come on. That's outrageous. We've missed the boat. We've completely missed it. all the big money, all the wealthy people, they already got their piece of it. And are we just exit liquidity so they can sell? I hate to think that way, but it feels that way. It feels like SpaceX ran out of money in the private sector and had to IPO. Maybe insiders were ready to cash out. So a higher ROI for active traders, at least in my experience right now, would be sympathy stocks, space theme stocks. So this is a space theme stock. Just last week, I made about $75,000 on this stock. It went up 1,000% in 3 days, 10x in 3 days. They put out a headline, and this headline was juicy. They absolutely knew what they're doing. SpaceX synergies, satellite and AI data centers. They put everything into this headline. I mean, they wordsmith this thing like crazy. And the stock went up 1,000%. This is another one last week, the week before. ASTC went up 3,500% in 1 week. They put out a headline, once again, boom, infrastructure initiative to advance future moon-based quantum computing manufacturing. What? But this to me feels like where there might be a lot of opportunity. So I'm gonna let SpaceX be the whale. I'm gonna let that be the big boat that's rocking all the ships in the harbor, and I'm just gonna be the little fish riding in its wake. And maybe I get a little piece of SpaceX on the day of the IPO. Maybe I get a trade on it. That I don't know. We ultimately, we'll see. I might. Maybe I'll buy it and hold it for a couple days. I don't know. But what is most likely is that I make a lot more money on sympathy stocks that are sort of riding the coattails of SpaceX. And I think that's where there's a lot more opportunity. None of this is without risk. You guys know that. I'm sharing everything with you just for educational purposes. I'm a trader. I'm actively trading every day. This is my weekly watch list. This is the game plan. I'm going to be watching SpaceX, but I'm really watching any stock that comes out with a headline that's space theme. This is the new headline right now, and it's something to pay attention to. So for those of you guys that enjoyed this deep dive into SpaceX, I hope you, number one, hit the thumbs up. Number two, subscribe to the channel. And if you want to watch me trade, including watch me trade the SpaceX IPO this Friday, June 12th, you could check out a 2-week trial at Warrior Trading. That'll give you access to the software that you've been watching me use here in the background. This is software that I've built out over the last, since 2017. So nearly 10 years, rounding up a little bit. It's software for charting, for scanning, breaking news, and we have chat rooms in here, and I have a live audio video broadcast where you can hear my daily market commentary as I share with you all of my years of educated intuition about what's happening in the market. And I show you my P&L in real time so you can see if I'm getting in or if I'm getting out and what I'm doing with my positions. So hope you guys check out the 2-week trial. Hope you enjoyed this episode, and I'll see you for the next upload real soon. If you haven't, by the way, checked out my brand new small account challenge, I'll put a link to that episode right up here. So check that out, and I'll see you guys. I'll be streaming tomorrow morning at 7 a.m.